Hello, this is Jordan. This video is being recorded on the afternoon of May 22nd, 2023. Thank you so much for joining me. In this video, I'm going to take a deeper look at gold, do some what I consider to be deep technical analysis, and there's tons of things that I could talk about, so a full deep look would probably be a 30-minute video, maybe even longer. So I'm going to try and condense it to less than 10 minutes, which can be difficult because I like to drone on. But I'm going to try and get across the most important points. Technically, I have two charts, so let's get right into it. So we're looking at a weekly bar chart of gold here. Gold at the top, and then below we have gold against foreign currencies. Another way of looking at that is gold multiplied by the US dollar index. And then at the bottom we have gold against the S&P 500. So starting off here, you can't see it in this chart. It's more visible if you look at a weekly candle chart or a monthly candle chart. The most recent candles are definitely bearish. They are potential reversal candles. So based on candlestick analysis of the monthly and weekly charts, they're telling you we've put in probably an interim peak here. There is a bearish reversal that's in progress. Also, if you look at the daily line chart, you have a mini double top. So not a triple top, but if you're just looking at the last couple weeks in a daily line chart, you can see a mini double top there. So the first level, you can see the thin blue line is around 1980. I mean, gold has bounced from that level quite a few times. You can already see the damage on the daily chart, but here on the weekly chart, assuming we get a weekly close below 1980, that's really the sign of the technical breakdown after that reversal. So after that, you have those two other lines, the horizontal lines, the first one coming into play right around 1900, and then you have another one around 1880. So those are key support levels, assuming gold breaks 1980. And if you go back and you look at the consolidation or the correction over the last 2.5 years, you can see that quite a few times gold has made peaks, be it at 1900 or 1880. So when we're looking at horizontal levels, you look at recent year on any chart, you look at recent years and find, okay, what were previous support and resistance points? And it's clear that, based on this weekly chart, 1900 and around 1880 are those key levels. Now, getting to things that are more important in the bigger picture, I have moving averages here, which are equivalent to the 200-day, the 400-day or 20-month, and then the 40-month moving average. And I'm going to show more of this in the next chart. But if you look at 2019, that was an interesting point there in the second quarter. The market made a low, gold market did, and you had these various important moving averages all coalescing in the same area. Now, the 40-month moving average, if you look at the last 35, 40 years for gold, you can see the 40-month moving average has been an excellent indicator. So that's why I use that in addition to the 200-day and the 400-day. So 2019, that was a key point. You'll see that on the next chart. And then very recently in February, we saw something similar where gold, it came down, it found support there, then it rallied. But, you go back to what happened, that low in May 2019, the Fed said it was going to cut rates basically at the end of May, or it indicated so. Then it did in the next month or two, and then gold had the breakout and it was off and running. Of course, the Fed hasn't cut rates yet. Maybe we could talk about the macro in another video, but the stock market's pushing higher. The dollar's rebounded, and bond yields have turned up, at least for the time being. So if that holds in the short term, that's a short-term negative fundamental development. And so based on that, you have the support levels at 1900, 1880, but then the next really strong support, it's going to be those moving averages, which again, you'll see this on the next chart. But, they come in, I think, around 1830 to 1840 right now. Numerous long-term moving averages. They're coalescing in that area. If you look at the daily or the weekly candle chart, there's a gap at 1867. And if we're looking at the 50% retracement of the rebound from October of last year to nearly 2100 in the last couple of weeks, that 50% retracement, which is always significant, that comes into play around the mid 1800s. So those are the key support levels to focus on. Now, moving on, gold against foreign currencies, gold against the stock market, those are long-term leading indicators for the gold price. I mean, especially gold against foreign currencies. And you can see gold against foreign currencies after the summer 2020 peak, gold made a higher high early 2022 with the Russian invasion, and very recently it made another higher high. But it hasn't quite broken away or held those highs, beyond a couple weeks or a couple months. When gold against foreign currencies makes a new all-time high and then it holds it for several months, that's a sign that gold in US dollars is going to follow suit. But so, gold against foreign currencies, it hasn't, at least in my opinion, you can see in 22, it made the new all-time high, but then it corrected. 23, it made the new all-time high. Now it looks like it's going to correct a little bit. So what we would need to see is, gold against foreign currencies make another higher high, and then that holds, and it's able to run for a couple months in a higher high, new all-time high type of scenario. So it hasn't, I know we're getting, really in the weeds, but it hasn't quite done that yet. But, nevertheless, gold's relative strength against all the other currencies, that's why gold is trading where it is, despite the US dollar being so much higher, than it was in recent years at various points. Now, in my opinion, the more important indicator, and, I've done videos and written about this, 10 different times probably over the last 5 years, gold against the stock market. If you want a real bull market in precious metals, gold has to outperform the stock market. Hasn't really done that in the last 5 or 6 years. I mean, at certain points, it has. I mean, if you look from 2018 to 2020, you see there, that little uptrend or cyclical uptrend, that aligned with that 80% move in gold from the low 1100s up to over 2000 over that 2-year period. Of course, you had the COVID crash in between. But, here we can see gold against the stock market. It made the low when the stock market peaked at the end of 21, had a nice move up, but then it's been correcting and consolidating. Then in recent months, it rallied back up to the high. So now it's pulling back. It's at 0.47, probably going to pull back more here as gold corrects and the stock market pushes higher. I don't know how sustainable that is, but at least, over the next month or two, that's the prognosis. And so, again, gold against the stock market, that will probably pull back and go lower, but eventually you're going to need to see that ratio break above that red line. That would be a new, 2.5 year high in that ratio. If and when that happens, that's when you're going to see, that's probably going to coincide with gold blowing through 2100. So look, that's what the stock market for numerous reasons, but you also have to look at it just technically and how it influences the gold price and gold movements. So last chart here in this video, I'm looking at a bunch of different moving averages, and we're looking at the 200-day, and these are all in weekly terms, down to the 40-month moving average. So I'm running a bunch of different weeklies here: 40-week, 60-week, 80-week, 100, all the way to 165-week, which is pretty close as far as equivalence to the 40-month moving average. And so when these moving averages are all tight in a tiny area with respect to a market, that's a sign that you're probably going to get a big move or a big break at some point. Now, and there's also other reasons too. You can look at the last 12 or 13 years of gold. Basically, it's at the same price. You could look at volatility indicators, short-term and long-term. Those things can also tell you a big move is coming. But with respect to gold, the other times that we've seen the moving averages in this kind of scenario were, you had the mid 90s, 1996, and then 2019. And so, of course, 1996, you had a big breakdown. And so 96 to 99, I mean, that was really horrible for gold in the entire industry. So you had a big breakdown there after, the moving averages were, they were all these, we have 6 or 7 different moving averages. They were very tight, all in the, within $5 or $10 of each other. Now, if you look at 2019, similar thing happened. We had that pullback in May 2019, and so that came down and then rebounded from all those moving averages in the tight space. And of course, you had the catalyst of the Fed indicating it was going to cut rates, and then it did cut rates. And it's interesting if you're looking at the price action and trying to compare it. 2019, it did have some similarities to 1996 because you did have this bullish consolidation, but both were within the context of being in, you could say, like a much larger downtrend. Because, you go back 5, 6, 7 years with respect to 2019, it would when that consolidation was happening, it was still well below 2011, 2012. Just like in 1996, it was well below the peaks in, 1987. It was still below 1990, and it was below the of course below the the peaks of 80 and 81 before gold crashed. So there were some similarities between 1996 and 2019. Where we are here and now, we're in a much stronger position than both of those different points, because the market is trading around an all-time high. So it's in a position of strength versus those other two times when it was so far below the all-time high. So in terms of long-term momentum, gold right now is in a much stronger position than at those 2 points. And so, as I pointed out here, you can see a couple of those moving averages. We're in the 1830 to 1840 area. Those are rising. I mean, they're probably, I would think by September, they're probably going to be 1850, 1860. Maybe, a few of them will be at 1870. But this is really the key support level moving forward. If this correction continues and you see gold take out 1900, then you have the potential scenario this summer of, gold coming down and then rebounding from there. And so you get a strong rebound from that point, then that's going to set up, a really explosive breakout, soon after that happens. And of course, we also have to assess the macro fundamental factors, because if the Fed is still hiking and the stock market's strong and the recession gets pushed out to next year, then gold will not break out in that kind of environment. So it's always important to assess what's going on with the macro fundamentals. You can't just only look at charts and price action, by itself. You're really limiting the analysis, in my opinion. But 2019, after that bounce, before the Fed cut, gold made a 65% move in only 15 months. So if you factor in 65% from the mid 1800s, that gives you 3,000. So potentially, I mean, this is the super bullish scenario. Potentially, you get gold coming down in the next couple months, testing the mid 1800s, and then you get a rebound and gold breaks out soon after that. The market sniffing recession, the Fed's going to have to cut, et cetera, et cetera. So a 65% move from there, that's $3,000 gold. Probably, the timing, if it duplicates that move, it'd be 3,000 gold, by the end of next year. So we'll leave the video on that note. I mean, it's almost 15 minutes. I didn't mean for it to be that long, but that's only 2 charts. So it's, I could do a 30-minute or an hour video. But, summing it all up, you have the key support levels, around 1900, 1880. Then you have all these moving averages in the mid 1800s. And at the same time, got to keep an eye on gold against the stock market and what's going on with, the economy and Fed policy and, recession and all that sort of thing. So that's the Cliff Notes version of the analysis. Well, it's like the Cliff Notes version of the Cliff Notes version, keeping it really simple there in a span of 20 or 30 seconds. Let me know what you think in the comments. Thanks for tuning in. Thank you if you made it all the way to the end of the video. And I'll talk to you guys again in the next video.